Looks like it's coming through okay. We'll share the video here. That definitely looks like it's coming through. And then let's share the platform here. Good. Well, I'm excited to be with you this morning. Nothing better than to trade with my good old pals at Trader on the Street. We're going to go ahead and it's a Federal Reserve meeting date today. So they've been meeting for 3 days, and so here coming up in a few hours, we get to hear the scripted results from that meeting. They're very careful and very cautious to make sure that they have every word exactly the way they want us to hear it. So so we'll get a scripted version of what's happening here in with the Federal Reserve here in a few hours. So leading up to that, in our trading sessions today, we expect a lot of what we've been getting all morning long, a lot of tail activity on the tops, a lot of tail activity on the bottoms, a lot of choppy trading, not really going anywhere, just a whole lot of nothing. So that's the way we're going to be positioned. Do you want to close that door, Salo? Salo, would you mind closing that door, this door? Sorry, I forgot to close the door to the office here. So would you mind closing that door? So anyway, that's what we would expect in our trading session today, is a whole lot of not a lot of directional movement, a lot of choppy trading. And so we'll have our job cut out for us this morning. Before we get too far down the path here, just want to kind of set the expectations of what this trading session is all about, what we're trying to accomplish. This is really my time to just trade with you. And so, sometimes we're demonstrating different things, trying to demonstrate different things in the market. Sometimes I'm trading with a guest where I'm trying to coach them through a session. But today but on these rallies, this is just my time to trade with you and really just kind of talk through what I'm looking at, what I'm seeing. So it's a very free thrown trading session, and not very, we don't have a particular agenda in any of these sessions. So with that, you're going to see a little bit of possibly a little bit of things that don't, we're not trying to model any kind of particular rules or anything like that. So just a little bit more Wild West in how we approach a market today. As long as you're good with that, then we'll just proceed and get into this trading session. What I'm looking for right now, is we had a little bit of so the market was pretty choppy, and then it retraced back up into the highs. I feel like that today, the tendency, or I feel like the market is going to try and go dollar weak today. I think the agenda among the Fed is for a weak dollar. I think they're fighting the natural pressures in the economy, the natural pressures being more towards a strong dollar. But I think that there's a little bit of a war going on right now between the policy side of the equation and the natural forces in the market. And so I think that today's one of those days that we're going to naturally see that weaker dollar try and push through. Now, can they do it? That's the big question. I don't know if they can do it. It's it's like, can you hold back the tide of water? We sure try, and whether we're successful or not has a lot of factors depending on it. So, but all in all, I think that's the position that I think that the Fed wants. So we're going to try and go for it, or they'll try and go for it. So I'm trading primarily with that philosophy in mind. Bias is not going to be something I'm going to depend on today. There are days when I depend heavily on it and days when I don't. Um, a stronger dollar is the bias for the most part, but today I'm going to rely less on that and rely more on the opposite. So just kind of getting my feet, dipping my feet in the water here just a little bit. I've got 3 little trades on. Market's not giving us enough volatility to really do anything fast, which has been the story all morning or all week long, really pretty much all month long, if you think about it. So let me just see what is happening on other currencies. Same boat. So nothing there. So right here, we should see a little bit of a pop back up through, a little follow through. This is a good time for some follow through to follow up that candle. So the turning point right there. And let's see if we can get that follow through. There's our targets. Now we're up on the highs. So I'm going to go ahead and build a short position in here, but it's going to be a really light position because maybe I might wait this one out. And keep running, like more run. Then I'll pound on that. I'll pound on that retracement. Like the more it can go, the better I'm feeling about this trade. Keep going. Some follow through here. Keep going. Good. So now we're starting to see the bearish pressure push on that. The taper talk is you look at what they want versus what they're saying. They're caught in between. Keep going. Now I'm going to start to build that short. I want to get those targets up above that white line right there. There we go. Okay, now I'm in a pretty good position. There will most likely be some follow through right up into these highs, maybe even beyond those highs. I'll get back to your question here in just a second. Very, very heavy position for that first leg or for that first stack of trades. Again, I'm breaking my rules right now. And I want on this pullback, on a pullback here, we're going to start to see some strength come into that right about there. So all my trades are underneath it. So I'm going to need a pretty solid turn in that market. Now, the morning has been this, right? We have not gone into momentum and directional trading. So I got to be careful that this could be that transition. And that candle on that 5-minute bar closed on the highs as well. So that's another worry on this trade. These trades, now I feel pretty good about these right in here structurally until I get new information like that. But all I'm looking for here is that retracement move. And I may be in this trade for a while. I was a little too early on that, a lot too early on that retracement scalp. It's turning into one of those directional move markets. So it's changing character on us, and this is where a lot of trouble develops for traders, is when we get that character change. So the character of how this price is behaving compared to all the rest of the morning is so different. You follow? And so it's that character change that we get stuck in, where it moves from this choppy trading to now very directional trading. And getting stuck in that transition just puts you in a position where you're going to have to wait for that market to really, you're going to have to wait for that momentum to ease off and start to give you a little bit of that volatility again. So that's what we're going to have to wait for in this trade. All right, John, your question about the taper talk. So taper talk is designed to ease the inflationary concerns in the market. So there's a lot of economists, there's a lot of argument right now between, the talking heads, whether we're in an inflation or whether the signs of deflation are kind of creeping into our economy. And the inflation, the taper talk is designed. It's more of a I don't want to use the word propaganda, but it's more of it's a tool to use to kind of put the inflationary pressures, inflationary pressure into the economy. So the Fed doesn't have to actually make decisions anymore. All they have to do is talk about decisions. And all the talk of this is, so we've established a little point right here that's going to be a real trick for us to get through. So I'm going to try and put a stack of trades in. There we go. This entire stack is going to be an adjustment trade. So I'm going to use that to like really clean up a lot of this trading over here. So clearly wrong in that trade. In those early stages of that trade, we were building our position up in here. That was just not the right place to be building it. and we're not getting any of that choppy trading. So I'm going to really need to, I'm going to have to take the biggest, I'm going to have to take a really good adjustment trade here very soon. Otherwise, I'm going to get into some challenges in position sizing. I gave you the warning in advance. I said, we're going to be Wild West today. So so this whole stack right in here, we're going to try and pull all those targets right up above that wick. This is building pressure in the market. Definitely did not see that big of a rally coming. Expected a rally, just not that big. It's overwhelming. So not done probably. So there's still room for this to grow. Right here. Give me a little bit of just something to work with here. This might be, just need something to work with. Pulling these down right now because I want to get them I want to maximize any income I can on that stack on a pullback, but it looks like it's gearing up for a good pullback right here. I'm not expecting anything down here. All I'm expecting is to really get back to that high right there. So pulling these back. I'm trying to, we're going to go very aggressive on taking the loss side on this trade if we can get that pullback. Man, it's just a persistent march. Again, my expectation is the top of that wick right there. So not even the bottom of that candle. The more it pushes higher, the more difficult this process gets. So way over way overextended ourselves in the very beginning. So the lesson is that first stack of trades, making sure that you're like, to weather a storm like this, you can't be in heavy in that first stack of trades. You've got to, this is why that process is so important, where you manage position size, because when you get into this situation where you're way heavy in the trade, not a good place to be. Looking for signs of that just a retracement right here. Look for a turn. We've established a pretty solid turning point right here. It's going to be difficult for that market there's so much momentum in this market right now. It's going to be difficult to navigate that turn. So let's root for that at least. A little bit more. There we go. A little pressure is left off, and take the bitter pill, start to peel off all that big first big stack that we made, where we're just like expecting that pullback off that overextension. There we go. I'm not expecting much more than this on that pullback. So looking for that market now to run back up to those highs. Whether if we can get more of a pullback, that's fantastic, but I'm not expecting it. And I gotta like wipe out that entire first stack of trades, which I think we've done the most part. Big adjustment there. And quite a drawdown on our account. Now I'm going to slow down on my scaling out, because if we can get that pullback, there's a good chance we can get back. Remember, we pointed this wick out. There's a really good chance that we could, not a really good chance. There is a chance we could get down to that level. And so I'll just lighten up and peel off slowly right now. So just slowly. We're in a good shape again, not too very manageable at this point. Very manageable. We were getting a little into a position where I was like, if this keeps rallying, it's becoming unmanageable. But now we're in a good spot. We talk a lot, like especially last week at the boot camp, we talked a lot about balancing out our positions, making sure that we're not getting too overextended into anything. Oh, this is great, guys. Phew. Pressure is off. First trade was a huge bust, but we managed to pull out of it okay. Not sure if we're going to hit that. We found the bottom right in here, so we've been moving sideways now quite a bit here. Come on. Oh, I was hoping that would pop down. And we're down to 3 positions, so we're in really good shape now. That just fixed everything. Normally, when I'm upside down like that, normally I need to run through a couple of iterations on that volatility. Today, I just got lucky because it pulled back enough to really get us out of almost everything. So John, yeah, it like today I traded about as uncharacteristically as uncharacteristic as it gets. Like normally I'm very, I think I came into the session saying I was going to be just that I've been trading that way all morning long, because all morning long these patterns have been, so that we've not had that all morning long. We've not had that move, right? You can all look at that chart and see. And so I've been stacking in real heavy on the outside ranges. I've been stacking in real heavy on those outside ranges, catching that high probability pullback, stacking in on the opposite side, catching that high probability pullback. But in order to make money at that, I've had to increase lot size. And so that's why I went in real heavy. And I warned you in the beginning, I was like, look, it's Wild West day today. I'm probably not going to be following those rules, but this is why the rules are there. This is why we are very managed in our entry positions, is because we need that money. We need those resources to get us through those persistent runs like that. When you get in heavy in the very beginning, you're just like, you're stacking in heavier until you can get that little pullback. So last 2 trades, there we go. Whew. That was not a fun experience. All right, now the big question is because we're getting that retrace, do we get back up into the highs, or do we just continue? Is this just a blowout that the market is like trying to blow everybody out and get us back into questioning whether the market's long or short? So I think, yeah, we get gone all the way back in there. I'm going to start with the long side again now, looking for that next move, which should be, quote unquote, should be. Now we're gonna follow our rules a little bit more carefully here. I'm trying to get these stacks underneath this line right here. So all of that's in really good shape spot if we get the rally here. Turning point for an up leg is clear up here, and we're right on that turning point. So chances are we're going to need to, we really do need to drop a little bit more to give ourselves a really good high probability hit, or we need to drop these down. So I'm going to split that stack into 2 pieces, one high probability, one more of a one more if we get the turn, one more before the turn. So we're going to split the stack into 2 pieces. One where we have to get the turn, where the market literally has to break into the new highs. And then one where we can just tag it before the turn even happens, before we even hit the ceiling. one where we can catch it in consolidation, one where we have to make the turn and move higher. There's the consolidation zone. John traded like we teach. That's good, John. That's good that you figured. It's good that the teaching, the technique works. It's good that the technique works. And it's a good lesson to watch someone just completely blow it out, right? I think, honestly, I think that most people, a lot of people, not most, I think a lot of traders, when they're struggling because they're not following that disciplined approach. They're trading more like I just did. And I'll be honest, I was looking to make some money in this session. And so that's why, I was like, I knew I was going to go in big before I even looked at it, before I even took the trade. So, okay, this is why we put that stack inside the consolidation, just because we can get that high probability. Maybe we get it, our outside stack right here. I'm going to make that even a little bit harder to get. Push that up just a little bit. So to hit this, we actually need to break out of that consolidation zone, right? We're trying right here. See if it breaks. See if we break out of that box. Chances are we head back down before we go up. Yeah, thanks, Norma. That was love demonstrating bad behavior, right? Kids are like, but Dad, you're doing it. But definitely, like, even cleaning out those trades up in here is do what I say, not what I do. But cleaning out those trades up here, you have to do that, and it's not an easy thing for most people to do. But I knew that if that thing, it had a really good chance of bouncing right here. Like, if momentum was really at play here, and it wasn't just like a false momentum, that market could have really come down. And right here, I've seen that so many times, just bounce, and then you're up in, at that next level up in there, you're blowing through these tops and you're a whole level away. So like in here in that zone, maybe even just a little bit less. But if you're not taking the bad trades off in that zone right there, you're very much exposing yourself to a really bad day in the market, a really bad day. So I've learned that even though I was aggressive in getting in, even though I was way heavier than I ever should have been, I knew that as it got into that zone, I had to be taking those off. I had to like reduce that max position, or that position size, down tremendously right there, because I was not in a position to. I could have probably done one or two more legs, but it would have just been crippling at that point. And so leaving, we cleared off most of that first trade back here. We cleared off most of that trade from back here, right there, if not all of it. And then we did leave some on. So after we cleared out, about half of our position, we did leave a little bit on in case it ran. And that was fortunate. That's just lucky, right? It's or not lucky, but it's just very fortunate that that's the path that the market chose to take. There's a probability it could have turned here. There's a smaller probability it would continue to march lower. So we're just fortunate that the probabilities worked out in our favor in that one, because when it got down into that stack, now I'm all the way back to break even. So I was like, still upside down, back to break even when it came in. Like, we had positioned ourselves really strong to catch the lows of that candle. So when it was right in here, that really wasn't, it really did put us in a good spot there. And then actually made a little bit of money on that as it dropped and finished out that stack. So maybe didn't make much money. So good demonstration, good lesson to learn. So now I don't know where this goes. Today's price action, reading price action on a day like today can be tricky. We should be pretty close to resistance layers. Let's see what price really did in that area. See if we can key off some of these areas in here. Not seeing a real good conglomerate spot in there, but there's going to be some sort of a resistance. I'm not sure if it's there. Most likely there or here, but I'd say probably right about in there. So we'll see. We'll see if we're how close we are in all of that. Doug, eating oranges. I'm not taking losses. I'm eating oranges. We're we're right on that. Let's throw that line on right in here. There is a good chance we can be back up on the highs. So I'm gonna wait for this little we're seeing resistance, through these wicks right in here. So I'm going to wait for this to kind of show us a good bullish candle, and then I'm going to start to build a small a long position. So we're gonna aim for the top of we're going to aim for the top up here. Look for a pullback, wait for that pullback to happen. Right there, add. And there's a good stack right there. I'm going to pull these top ones down. So 11 seconds left on that candle. We're looking for a body high, the market to close on the body high, not on a wick. So wicks looks like it's going to be a wick for us. So now with that failure to move higher, should be back down on these lows if normal price action. And then I'm going to build a little stack, just a really small one. I think I'm only going to build up to about 1.2 in here. Now I'm trading like weak sauce. There we go. Right there. Okay, so we have about 6 trades up here, about 6 trades down in these areas right in here. There's 7 and 8. And what I want to do is I want to kind of tee in on the top of that ink on that wick right there. Now, great place for that market to drop lower and then put us back down into this. So next stack will be down on these bottoms. Down in here. Could put a little bit of a small, I might put a small position on right here. That'll put us give us some targets underneath the turning point up there. So all of those trades are on the high of that wick, right? And that's going to be it could be a difficult point to get through or get up to, and especially get out of that stack of trades. So ideally, I want those trades, some margin below the wick. So I'm going to pull them down. And then what I'm going to do is I'm going to put another trade on. So another trade on that with a target right in that same area. And so what I lose by pulling those down, a couple of fractions of a pip, so like maybe 0.3, 0.2, 0.3 pips, I'll make up on that extra trade that I put on the book. So the net income equivalent should be the same right here as it was before. I'm just using more money to get to that point. So my cash utilization goes down, but my income potential remains about the same. And so I often will do that. I'll often do that just to get those targets in a better spot so that I can make the same amount of money on that trade if it hits there, but have it in a much higher probability striking zone. If that makes sense. Actually, I hope that makes sense, because it's that kind of thinking. It's that kind of thinking that really allows you to do a lot of the management techniques that we do. So you got to know when you want to take a little extra risk. Because you're always giving up something on one side of the table. You're giving up to get this, you have to give up something here. And so you're always balancing what you're giving up for what you want out of the market. I want a better probability. I'm going to give up income, but if I put another trade on here, I can make up the income, but I'm getting a smaller ROI. So ROI doesn't really matter. It's income in the game at the end of the day. So better to have that stack right in there than up there. Probabilities of incomes are super important. Okay, so now we're talking about where this is the move that we were expecting. And I said we put a little small something on right here. So that's what we're doing. Got a little small something on there. And then we're going to put a bigger position on the lows right in here. So there is a good chance, there is a probability it could break through the lows there. And it's a pretty good probability at this point. In which case we've got that next support level. So in terms of distributing position size, see what I'm doing right now is I'm like already looking at possible scenarios down in this area. And I'm already planning out how I'm going to be doing those, how I'm going to be managing those positions before they get there. So with the likelihood of that market, there's a very decent chance that it could break this support. Good chance it'll hold, but there's also that chance it break. So normally I would build a really strong position here, anticipating that a hold there. But if it breaks down, well, we've got the major support, the major resistance level through all the morning activity down on this line. And so what I'll do is I'll build a decent position here, smaller than I normally would, but I'll build a much heavier position in here. So I'm already looking down the path. Hopefully it never comes to that. Hopefully the idea that it would stop right here holds true. Where is it? Come on. There we go. Hopefully the idea that it'll stop there holds true and bounce back up through. And we never have to work through all of that. But as a trader, I need to have a plan. I need to know what I'm going to do at those layers. So all of that's this is playing out really nice. That potential stop right there is actually working out pretty good. Now let's see if we can break back up out through there. So we did book a little bit on that. There's the rest of it. That's fantastic. Great place. You book those losses, right? If you're overextended, if you're out of balance, this is a great place. You just put a little bit of a little bit of money into the account, take some off right there. If you're overextended. Now we're back in that spot where there's a good chance that, I mean, I feel much better even if these trades were under here, but we'll kind of leave them there. But realize we may not even hit that because of this line. We've got a wick high, body high all through there. So there's a decent chance we won't hit him even. Did get a little wick through there, so that's good. I don't know how many trades I have on the, oh, just the one. Whew, that was great, right? See how that worked out? Even just the wick gave us our profit target on that. That's great. That wick, matching wicks. It's like off to the derby. Same top hat. Now, this is a long shot, right? At this stage with the development that we have, it's kind of a long shot. Look at that consolidation on the 5-minute chart. It's going to have to make the turn. It can do it, kind of a long shot. So you have the question, you have the, the question is, do you peel them off or do you let it run? So I think I'm going to peel off 2 and let them run. Let the rest run. Okay, so I'm going to wait for it to drop back down onto these lows, but this line is not proven to be as strong as this point down here. So I think I'm going to right here. Good, excellent. I'll build my stack right in there. I like that. I like that one. Even if it doesn't work out, I just like the positioning of that. Even if it still has to run lower, I still like the positioning of that trade. So we're going to pull these trades just down just a little bit. Give us that little buffer before the highs. Now, again, this whole scenario back here is still at play, right? There's a good chance it can drop. So we're going to add some trades on the bottom here, and then definitely add some trades on the previous, resistance layer. Oh, John, yes, thank you. Sorry, we did kind of get into the thick of trading, which is not a bad thing. So weak dollar. So a lot of the taper tantrum talk is just talk. I mean, there's a pretty famous, now famous white paper that the Fed released back in 2000. I don't remember, 2000, early 2000s. It talked about, just the power, not physically pulling the lever of interest rates, but just talking about pulling the lever of interest rates will often have a similar impact on the economy as actually pulling the rates, right? And so anytime you notice, watch the news cycle, anytime we start getting, new information about inflation, right? A lot of what you start to hear is little leaks about, we're talking about tapering, we're talking about tapering. And that impact I started talking and I missed my trade, dang it. Anyway, so that talk is mostly just a mechanism to help stave off the inflation. Because when key decision makers, producers, commodity pricing, pricers, when they hear those kind of talks, then they adjust, right? And so they may actually, right, here's where I want to build. Okay, so we're going to build a really good solid position here. May break through, but this is where we want to build a key position. And then we'll let that adjust and run and do whatever it needs to do. So in reality, taper talk does not fit a weak dollar policy. Like um, if anything, that strengthens the dollar. Um, and so how do those two policies kind of intersect, and how so um, in reality, what the Fed wants is a weaker dollar, but they can't run the risk of inflation getting away from them, so they have to talk of tapering. And so you've got two conflicting policies that are causing some problems in those circles. I think that the idea of a weaker dollar is more the true interest, like that's their true interest. I don't think that the tapering is really what they want to be doing. I think that they want the inflation and they want the weaker dollar. They, but they being the Federal Reserve. But I don't know if they can get it. You can want something and not be able to get it. But they'll try. And on days like today, that, the news that'll come out, I'm, I don't know, but my guess would be that the news will be very, very it'll have the overtones of we're being responsible and we're going to start tapering, but it'll have the undertones of we're going to be very accommodative to the weaker dollar, if that makes sense. No. It's all good. Okay, so we've broken down through that support level. It's not holding. But there's so many levels in here where we could key off of decision points. Really, I think I'm still going to gear in, still build these stacks up for an up leg right in here. We got a good stack of trades on there that hit their target. I like that. Those little moments make huge difference in your day, right? That when being able to bounce up and catch the majority of that trade, we left a little bit on the table, but being able to jump up and catch the majority of that trade is just a really good thing. But let's turn here. Can we get the turn? Not a good place to build. So I just took a quick trade just to see where it puts our targets. Not a great place for targets, or not a great place to add risk. It's a great place for targets because we're going to have to get the turn to hit this stack. And that turn should give us enough opportunity to make some good money on that stack. So I'm widening them out just a little bit. Nice. Very nice. Now the turn. Let's see if we can get the turn or a wick. A wick is okay. the break, the test, this is all good. And let's see if we can get the turn. Measured move. We've got a measured move, which is good, right? So there's our leg before the consolidation pattern. There's our leg after the consolidation pattern, almost perfect measured move. Where are those buyers that were back in here? Where are they? You hear, you jump in, you mess everything up, and then you like bail, you're like gonzo. Where'd you go? Those are little games they play with the industry, in the industry. Little games they play with us that really mess us up in the moment. Let's see if we can get that stack. That'd be great to get that stack. I'm going to put a few more trades on and I'm going to pull them down. I just want to make a little bit of money on that stack zone. These won't make good money, but we pulled the bottoms up on some of them. So I'm just really balancing into a good finale right in there. And then up here, probably not going to get up into those ranges anytime soon. So I'm going to pull these down into the high probability zone where we can just clear them off the books with minimal impact on our bottom line. Okay. Right, here's a great place for that thing to break. See if we can get that. Forty seconds left. Look there. This is most likely a wick. So most likely. There's the wick. Get that. Okay, now we're down into the range where it could actually break. So look at 6 seconds left. 5, 4. Let's see if we can pop higher. It's not showing very much strength going into the close. So go pick that up. Now let's see if we can break through this next little line. This line has proved to be a pretty important in the trading session. I'll just put another one on right there. That line's been a pretty significant point. 20 seconds left. Watch that wick. Watch for that wick. Don't love that those are right on the top of that consolidation box. So I'm going to pull them up. Maybe a mistake, but I can always close things out manually if I need to. Let me see if we can break through. Lauren, you finally got it through the noggin that you got to peel those losses off. And if we don't, oh, trading can be nasty, right, Lauren? So important we peel those things off, and it's so hard to do. I'm not, I can't blame anyone for having a hard time with it. It's hard. It's not an easy task. I'm going to take this chance right here and just peel off again some of those trades. Just lighten up that position. See, oh, look, there we go. Market's going to be nice to me now. Peel off a couple more. Okay, we'll just close out the rest. We'll call it a day there. Woo. I love trading. But I got to tell you that I did not love that move. I was way positioned wrong. Like, I broke my rules right in the beginning. I broke the rules right in the beginning, and it just punished me like for all of that time. Again, like this is there's two things at play here. Number one, you got character, one type of market character, right? What I was trading all morning long, one type of character, and then you get a different type of character in the market. And so getting caught in that transition is so easy. I don't know why it's so easy, but it's so easy to do. And I think, and it's bad because you're trading for one style and then you get a different style. You're trading for chop and you get the trending market. So not easy transition to make. The reason why we go in the different layers, the way that we scale into the different layers is because it keeps it manageable. We're able to manage through those transition periods and through those marching markets, through those momentum markets. And so when you violate those rules and you get in heavy, you can't trade. You can't trade the way you normally trade. And so my biggest mistake in all of that is not getting caught in a transitioning market. I went in way too heavy in the beginning. And you watch, like if you go back and watch all of the videos that we've ever done, the majority of problems come because of size, not because of being wrong. Being wrong is going to happen all the time in the market. The problems come because you misallocated or you don't have a good balance in your allocations. So I think that will be the takeaway for today. And I think that's a good 10,000 street cred lesson. So let me just make sure that each of you get that 10,000 patience with us. We're still working through how to get those street creds and make it all work. So have some patience with us. But if you haven't seen it by maybe Friday, shoot us an email and we'll get you taken care of. So great trading with you. Thank you, everybody. Appreciate it. And we'll see you Thursday with the apiary trading room. So thanks. We'll see you then. Bye.